Okay, find out why Chicago is one of the nation's fastest selling housing markets. September 16th, 2025 market trends coming at you right now. Well, hello, this is Steve Kaempf with the People Not Titles podcast, Market Trends Edition, September 16th. I'm here with Matt Lombardi, my cohort, colleague, and partner. Matt, we have a great news lineup today.
Yeah, I feel this is going to be positive.
Positive.
If we're looking for the theme of today and this week's episode,
Positivity. A lot of good news here. Matt, the first piece of good news is mortgage rates drop. Let's talk about it.
So, over the last couple of weeks, there's been a lot of mixed signals in the market. Jobs report not good, inflation not good. But that also lends to stagflation.
Yeah.
And what that lends to is, hey, the Fed's meeting today and tomorrow, and everybody is anticipating a rate cut. So mortgage rates have plummeted, and they really have gone down.
Yes.
And demand has surged. So just some highlights today. Nice little snapshot is the current 30-year fixed rate is currently around 6.25%, and the 15-year fix is around 5.7%, which is, I think, the 9th week in a row that mortgage rates have dropped, and they are at their lowest level in over, I believe, 12 months. And so what this is translated to, Steve, is a huge surge in buyer demand, which is its strongest since 2022. Applications are up over 9% week over week. Purchase applications are up 23% year over year.
And we're seeing it, Matt, in our business.
We are seeing it.
It's popping.
And refinance applications are up 12%. And we talked about this yesterday in our work meetings, is we're anticipating that September, October are going to be pretty good.
Busy
from
months,
what
Matt.
we see on the horizon. And we've talked about this point, Steve.
We have.
Where
the psychological effect.
An economist was saying that once rates get below 6.5%, it's going to have a positive psychological effect.
Yep.
Because everybody sits in the negative. We don't want to sit in the negative.
No.
You and I definitely don't.
No, we don't, Matt.
So the positive psychological effect of these lower mortgage rates are going to be great.
Matt, so is the Fed meeting on Jekyll Island, or are they meeting somewhere else?
I don't know where they're meeting this
Okay.
month. It's definitely not Jackson Hole. That's like a once a year or whatever,
Yes.
once every couple of years event. But I'm sure it's a lovely location nonetheless.
Absolutely.
Because you can't have them at the Days Inn
No.
by O'Hare.
I agree with that. Yeah, is that where OJ hid the knife? Anyway, okay. Inflation and jobs send warning signs, Matt.
Right.
What is this talking
So
about?
related to this is, the Fed's going to look at everything in totality, and their job is not to keep mortgage rates low. They're to keep the economy flowing and jobs pumping. But inflation and the jobs are showing warning signs where the consumer price index rose almost 3% in August, which is up from 2.7%. And the weak job reports that we've talked about over the last couple weeks is showing that the labor market is probably worse than we thought, what others and the experts thought. And so the Fed's going to weigh inflation pressure and labor versus labor weaknesses. And so what's next for the Fed, Steve?
What is next, Matt?
We all anticipate a rate cut.
Yes.
But the question is, how big is that rate cut going to be? Most prognosticators and experts are saying about 25 basis points. Others are saying 50.
Matt, and to stem the enthusiasm for a 25 basis point cut, people feel like that's already built into the market. So you're not going to wake up with a quarter point drop in the rate, or in the Fed rate, and all of a sudden wake up the next day and have a quarter point impact on mortgage rates.
Right.
Now, if they drop a half a point, 3/4 of a point, we could see a shift. And even just the Fed dropping could be like, I'm going to go buy a home. I don't know.
And we've talked about this, and there is a psychological effect because the news makers are the Fed. And everybody's covering what the Fed's going to say. What is Jerome Powell going to say? What is Trump going to say when it's not a big enough rate cut and too late Powell or whatever he's been calling him? But the psychological effect cannot be discounted because people want positive news, and they've been living with not positive news in the real estate market. So the Fed's meeting today and tomorrow, and I think any announcement comes tomorrow midday, So we will be watching that and reporting on it accordingly.
Okay, Matt, Zillow and Compass continue their legal battle. I think it's getting interesting, Matt. Compass versus Zillow courtroom clash is heating up. And now one of Zillow's co-founders is at the center of the dispute. Let's talk about that.
This is really interesting, and interesting story in that Compass wants to depose Zillow co-founder Lloyd Frink, claiming he has unique insights on Zillow's private listing ban, and Zillow is arguing that the move is unnecessary and amounts to harassment. What this comes down to is Compass wants to bring to light that, hey man, Zillow knew all about our intentions and actually met with us about what we want to do with our private listings network. And Zillow, on the public side, initiated the ban, which has created lots of lawsuits, lots of kerfuffle, and lots of indigestion with many in the industry.
And lots of conversation about clear cooperation policy. And Zillow has kind of positioned themselves as the people's champion of transparency and disclosure, and Compass has been kind of positioned as the folks that want to keep and hoard the listings for themselves, but there might be another story to this.
Absolutely. So depositions reveal that a meeting took place on April 1st between Compass CEO Robert Refkin and Zillow executives, which included Mr. Frink, just before Zillow announced its private listing ban. Frink intended to signal Zillow's seriousness in finding a solution, and Zillow pitched Compass on listing transparency and even broader national partnership tied to Compass submitting more listings to the MLS.
Matt, I say release the files.
We need to live in the sunshine in everything that we do.
Yep.
Transparency clears all.
Absolutely. Clear cooperation.
So this, like I said, this is interesting that there was allegedly a meeting that took place where this was all discussed. Maybe the meeting went sideways. Who knows what happened?
Man, and there could have been, how I'm reading into this, and it may be or may not, maybe Zillow had a secret strategy that Frink was a part of, and they don't want to reveal this secret strategy. What is Frink's role under this debate here, Matt?
So Compass argues that Frink was central to negotiations and can speak directly about Zillow's strategy, which obviously if he's part of the meeting, co-founder and COO of Zillow, he would have that authority and would be able to speak on that intelligently. Zillow is countering that Compass already deposed 3 of their executives who were directly involved with these talks, making Frink's deposition unnecessary.
Matt, my view on this is just because you agree on one point with Zillow, let's say if you're in the clear cooperation camp, it doesn't make Zillow your friend. Zillow has clearly have a history of gobbling things up, keeping it for themselves, and then reselling it to everybody else. So in this way, I think Compass taking on Zillow could wind up being the David against the Goliath here,
or Goliath versus Goliath. But
yeah,
yes,
Goliath
I mean they're
versus
both.
Goliath.
But yes,
yeah.
I'm the companies involved in the companies out there in our real estate industry. They're there to make money.
Absolutely.
And I won't get into it. We've talked about it many times. They're making money on the backs of you agents and consumers out there.
100%.
But they're in it to make a buck.
Yep.
So this is a very interesting development. And so how to wrap this up is the U.S. District Court of Southern New York is going to decide whether Compass can move forward with Frink's deposition on September 24th. So we will keep a close eye on this because I want to see what comes out of this if there is more if deposition is done and what
more to be revealed.
Right.
Matt, and I would say if you're just an agent here, how does this make a difference to me? I think what the good news is, if you're separate from Compass and outside of the Zillow dust cloud here, you can just keep the main thing. And for this, seems to me, this is a distraction for Compass agents. This is a distraction for Zillow, and someone's going to fill the void with service, intentionality, and taking the consumer's best interests at heart. Okay, Matt. Home Buyers Privacy Protection Act signed into law. And this kind of piggybacks onto this Zillow story where you have all this data, everyone gathering, amassing all this kind of thing, and the consumer sitting there saying, why the hell am I getting 50,000 phone calls a night from these goofballs that are trying to sell me something. It's because someone sold your data. So we have good news on that.
The money is in the data.
The money is
money
in the
is
data.
in the data. So home buyers, you just gained protections against the industry practice that's long been criticized, and it's the sale of your personal data through trigger leads. So this is trigger leads is the headline of what it is, but it's called the Home Buyers Privacy Protection Act.
It's a new law signed into effect by Donald Trump himself, the Home Buyers Privacy Protection Act. And it's on September 5th is when he signed it in the law, Matt, or signed it.
He signed it, and so the effective, so it gives the industry time to make sure. Right. No, it gives them time to
get in line.
Get in line. So the effective date where this law takes place will be March 5th of 2026. And what it does is it bans credit bureaus from selling borrow information pretty much immediately after a mortgage credit inquiry without consent. And it protects home buyers from the flood of unwanted calls, texts, and emails. So you guys out there, when you do a credit check or you get a mortgage or anything that ticks the system, you are probably getting bombarded with calls, emails, mail, everything in between for offers and who knows what else from banks, financial institutions, lenders, etc.
Yeah, and the good news is on this side, Matt, if you're a loan officer or mortgage consultant that's sitting down with a client, you're almost afraid to pull their credit because you know the moment you do, ba-bing, ba-bang, ba-boom, you get 1,000 different calls. And in this case, your client, if you've built a relationship with them, is going to be somewhat protected from this.
It is. It is. So the industry full 100% support on this. NAR, Mortgage Bankers Associations, and many of the large mortgage lenders and brokerages out there supported this. I know our folks here did as well. And it's seen as a huge win for consumer privacy, transparency, and control. The impact on borrowers is consumers' data is going to be more secure, and credit offers will only be allowed with consent or from existing banks, lenders, or servicers. So if you have an existing relationship with a financial institution, you could still get promotions from them.
And typically when you're signing these documents or giving authorization, you can click that I do not consent to have my info sold button, which we recommend you do. And now you're going to be protected, and your move that you're making is not going to be shouted out to the rest of the world out there.
Right. So data is the money maker. You control your own data. So Steve, I'm glad you said that.
Yes.
You know, there is probably going to be some form, pop-up box, check this. Always check that, not only for your financial institutions, but everything you're a part of if you don't want to be spammed and constantly marketed to.
Absolutely.
So the big picture is industry leaders call it a huge victory, a major victory for borrowers, and proof of what can happen when mortgage groups around unite around consumer-based items.
Yeah, and so kudos to the Mortgage Bankers Association for putting this into it. Matt, Home Buyers Privacy Protection Act signed, that's property insurance is now the fastest growing mortgage expense, Matt. Wow.
We know this, but now the proof is in the pudding. You homeowners out there, Steve and I as property and homeowners experience it just like you.
We hear about it all the time, Matt. We see it on the settlement statements. The dollar amount for property insurance is going up and up. And even if you haven't filed a claim in years, it still seems to impact you.
So before we get into it, I mean, in the insurance industry, it's a shared service. So we in the Midwest, in the Chicago marketplace, are paying higher premiums not only for our local area, but for California, Florida, Texas, Oklahoma, all these places where natural disasters have been happening, because
you're sharing the cost of the burden.
Because State Farm, Liberty, Progressive, they're nationwide and they're trying to hedge their bets. So
absolutely,
our prices here in the Chicago marketplace have gone up too, but not as significantly in other areas.
And it's almost impossible for a hurricane to hit in Florida and for them to isolate the cost and pass it on to just that segment of people, although they should. And instead, they spread it out amongst everybody. People would say it's unfair, but let's get into it, Matt. What are the rising costs?
So this is from the ICE Mortgage Monitor report from this month. So property insurance costs continue to climb, adding pressure on the mortgage affordability across the U.S. Average property insurance payments for a single-family home rose almost 4.9% in the first half of 2025. which is now a new high. Year over year jump, the costs are up over 11% from last year, or about $20 per month. So typical mortgage holders now pay nearly $2,370 for their annual property insurance bill, which I don't know what you're paying. I am fortunately not paying that much,
Yep.
but not far from it.
Not far from it, Matt.
And that's almost 10% of total mortgage expenses now. So when you lump in everything that goes into a mortgage, interest, tax, and principal, the highest percentage and the highest cost growth is on the insurance side, which is 11% year over year. And we talked about it, natural disasters, global annual property loss from catastrophes hit $152 billion so far this year. And that's up from $132 billion an average over the last 5 years. This includes inflation, climate change, and growth, population growth in urban areas.
Matt, I also looked into this. You have these contractors that go around with their ladder, right? And a bird farts on your shingles, and next thing you know, there's a little chip in it, and they're coming in to write you on a check for $15,000, and the contractor replaces the whole roof. There is over $500 billion of insurance fraud a year, which impacts the consumer by $400 to $700. The People Not Titles podcast is brought to you by Land Trust Title Services, your partners for results. So insurance fraud is a huge thing. They're trying to get ahead of that, but it's very difficult when the homeowner gets told by the contractor, the hailstorm came in and there's marks on your property or siding or whatever it is, and next thing you know, they're redoing the whole thing and doing 15 people in the neighborhood.
Yeah, I forget.
I'm not saying that's fraud. I'm just saying it's a stretch.
I've seen that in action where I live. I did not do it.
No.
But I know many others. When we had a huge hailstorm years ago, it seemed
they
like
just over that get a new roof,
over
$50,000.
that summer, it was lots of new roofs were put on. And what I've noticed, because I've recently renewed our property insurance, the insurance companies are now hedging their bets when it comes to wind and hail damage of your roof and property, where it's not covered. You have to pay X amount, or it's a minimum amount, like say $7,500 out of pocket.
Yeah.
If you claim a new roof for wind or hail damage.
Absolutely.
Because there's just too much cost and too much rising out there. Now, trust me, the insurance companies, I don't feel sorry for them. That's the business they're in, but they also have to hedge their bets and keep profitability.
No doubt about it, yes. They have to pay for those commercials to sucker us in some more, Matt.
I would love to see if they stopped advertising for, State Farm, Liberty, and Allstate.
Yeah.
How much the insurance premiums would go down.
It's tragic,
I'm
Matt.
not going to pontificate, but...
Matt, what are the regional differences and what are the legislative changes that have to do with it?
Yeah, so California has the biggest increase, and that's due to the wildfires.
Yep.
I mean, it's up 9% in the first half of 2025.
Florida.
And San Diego and San Francisco saw almost 20% jumps in premium. Florida and the Gulf Coast, some markets saw slight declines in premiums after reforms, but it's still one of the most expensive in the nation, and we've talked about that. You poor people in Florida are paying double whammies of insurance and assessments. The Carolinas, big increases due to the flooding. And the Midwest, which I wouldn't say Oklahoma City's in the Midwest, but Oklahoma City, Omaha, and Tulsa rank among the most expensive due to wind and hail damage risks.
Chicago's a pretty safe place to live, Matt.
Chicago is going to become...
No tsunamis, no hurricanes, very little hail, peaceful. If you can avoid the bullets, it's a nice place.
It's funny. I was downtown this week, and I told you, and I said to my nephew, or cousin, I said, how safe do you think Chicago is? He's like, I loved it. So
beautiful.
Safer than you think. Legislative changes. Florida reforms reduce the number of homeowners relying on their state-backed plan, down from 25% to 16% this year. Miami's reliance dropped from 46 to 27%. The state of Florida had a fund for state residents in the Florida, and that became the #1 home insurer.
Wow.
So they had to do some reforms for that because the state can't handle that. And I think that's
We
enough.
kicked that dog, Matt.
Yeah, I was going to say. So I think we're good with that. Just keep an eye on, and when you have to renew your homeowner's insurance, compare and contrast.
Absolutely.
Because there are other options out there, and maybe you don't need the high level, especially those of you, which I think is over 25 to 30% now, that own your home free and clear.
Yeah.
Technically, you don't need insurance because
there's a lot of self-insurance going on.
You know, people with mortgages, you have to have property insurance, but you know, take a look at your insurance premiums and what's actually covered and what you think you'll need, because you could significantly reduce the costs.
Matt, Chicago, now we have good Chicago news right here, okay?
Great.
Chicago is one of the nation's fastest selling housing markets. What is happening here, Matt?
Chicago area housing market is moving at a lightning pace, fueled by historically low inventory, high buyer demand, and a circular problem that keeps homes off the market. So some of the key points here: Chicago is tied for the second fastest selling housing market in August, with homes averaging 37 days on the market, and that's compared to 60 days or 2 months everywhere else.
So it's about half the time as
time.
everywhere else. Amazing. They're flying off the shelves.
Flying
Matt.
off the shelf. The number one fastest selling market, Milwaukee.
Ooh. Wow.
And why? Inventory remains historically tight. Buyers in Metro Chicago marketplace have less than 40% of the options they had in 5 years ago, 2019. We've talked about that. Inventory levels went from here and have stayed here for a 5-year period. Many homeowners are holding on to their low mortgage rates that they got during the pandemic. And we, I'm going to put myself in there, not that I'm selling my home, but we are reluctant to sell and take on higher payments, which fuels what's known as the circular problem of limited supply.
Matt, and are we seeing the return here of bidding wars? I think we might. With low inventory, people see something they like and boom, 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 it starts to bid up.
So you have the bidding wars for those, and I would say for those higher price, for those million and above homes, a lot of cash deals still, a lot of bidding wars. If the price, let's go to a median sales price, if the home is priced right, people are doing multiple bidding wars. However, not every home is moving fast. So, you know, for every home that sells in under 30 days, you have many others that are selling for higher. And those, you know, not every home moves fast. Overpriced and less appealing properties are still sitting on the market.
Matt, you do have a little case study here of boots on the ground of a local agent. Who is that?
Local agent is Swati Saxena, who's a Baird Warner agent.
Yep.
And her example is she closed 2 deals this summer, $625 sale and a $935 purchase, both under contract in 5 days.
Yeah, and so if it's priced right, in great markets, it's going to move, Matt. And I think, Matt, with every eighth of point ticking down of rates, you're going to see a whole new wave of these folks putting their homes on the market and a whole new wave of buyers.
So I have an update, and I've talked
Let's
about
hear
this
it.
on some episodes. There is a house 3 doors down from me that has now been relisted.
Is it owned by the singer of 3 Doors Down or no?
No.
Is that?
No,
Yeah,
but that's
Three
good.
Blind Mice,
Yeah,
whatever.
well,
okay.
3 Dog Night.
3 Dog Night. That's good.
So this house, almost a complete teardown, sat on the market. I think they started at $1.2 million over probably 15 months ago.
Put it on as a rental, Matt. I know this story.
Put it on as a rental. I think I saw people move in there. I had heard they moved in there. My wife and I walked past the house last night. They had the windows open, vacant, and there's a new listing. So if you're looking for a house, $899 is $899,000 for the new price.
From 1.2 million to 899. That's 300 grand.
And no offense if the owners are watching this, that's still.
They probably are watching this, Matt. Why wouldn't they be?
You need to lower your price, and you need to change your agent and brokerage.
Yes. Okay,
anyway.
We won't say who it's listed by, Matt, but we can't wait to hear the end of that story. Matt, real estate's economic impact in 2024. This is surprising, Matt, and let's get to it.
So we always know that real estate is a huge impact on our economy.
Absolutely.
Until we saw this, it was like eye-opening.
Yeah.
And so the real estate industry accounted for $5.3 trillion, representing 18.3% of the U.S. gross domestic product in 2024. So this came from NAR and some other economists that came up with this.
What are
And
the key components,
Key
Matt?
components are, number one, residential investment. This includes spending on new single-family and multifamily structures, as well as home improvements. So that's number one. Number two, brokerage services. This includes fees from real estate agents and brokers. And the third component is housing services, which includes rent and rent for owner-occupied housing.
So, Matt, the combination of the residential investment, the brokerage services, and housing services, all that comprised is 5.3 trillion bucks. So, if you're in the real estate industry, if you're a professional here, you are in an industry that has 1/5 of the American economy housed in it. So, Matt, what is the significance here?
If considered a standalone sector, this is great. The real estate industry would rank among the world's largest economies, and it supports just over 14 million jobs and generates 881 billion in personal earnings.
Wow.
So yeah, those in the real estate industry, those doing the deals, that includes agents, brokers, but contractors, leasing agents, lender, everybody in between. It's a big deal, and so yes.
And Matt, rightfully so, it is the biggest investment that people will make, and I love it that we're in this industry. What are the state variations here, Matt?
So just as a side note, states like Florida, Nevada, Delaware, and Arizona, real estate contributes over 23% to their state GDP, and that's from infrastructure development and population growth.
Amazing. Matt, that's impressive. Thank you. September, wrapping up here, is Realtor Safety Month. Matt, we want our realtors to stay safe. Let's talk about this.
Yeah, so we're middle of the month. We probably should have talked about this at the first end of the month,
Yeah.
but hey, middle of the month, you still got time
To be
to
safe.
be safe. So I forget the exact year NAR designated that September Realtor Safety Month, but safety has always been an issue for you agents in the profession. But it also now, they've sort of gone from just the realtor safety perspective, but also cybersecurity, all the things that we talk about, for protecting yourself from online crimes as well.
Yeah, Matt, and you know what? If you're selling a home, you don't want every schmuck just walking in, casing the joint. You want to make sure these people are vetted, and realtors do a great job of vetting out with the various apps and whatnot to make sure who's coming to see the property, what's going on here. So I think it matters not just for agents, but for everyone who's involved in the transaction.
So yeah, so the purpose of the month is to raise awareness in the industry, especially amongst you agents and brokers out there in the day-to-day practice of real estate. So to be aware, you often work alone, meet new clients in unfamiliar places, host open houses, and those are all personal safety risks.
Absolutely. What's the key focus here, Matt?
So number one, personal safety when showing homes or meeting new clients. Cybersecurity and protecting your client data, which is a huge component. You and the brokerage side have lots of sensitive financial information. We on the title side also do. Mortgage, you also have sensitive information. You need to lock that up and or destroy it when appropriate. And you need to have safety in the office, on the road, and obviously when you're showing properties, whether that's open houses or just a walkthrough.
Matt, in the NAR, to their credit, they have a lot of different resources. What are those?
Some of the resources include webinars. So I don't think I mentioned the website. It is nar.realtor/safety. You can go there for the full wealth of information from NAR. They probably have 15 years a repository of information for brokers. I know the Real Estate Association, state and locals, they do a lot of training as well as seminars, webinars on this. But from the national level, a huge repository of information at nar.realtor/safety.
Matt, we have some practical tips.
Practical tips. And these are real high level stuff, and you guys should be following this. Number one, always let someone know your schedule and when you're meeting a new client.
Yep.
Number two, meet new clients at a public place first. Primarily, you should be meeting them at your local brokerage's office with witnesses and people, and get their ID and get information to make sure they are legit. Does that 100% is going to ensure that you're safe? No, but it minimizes so many things when you're forcing some criminal predator into a public forum to say, here's who he is, and here's our camera capturing him.
Yep.
Here's the license and ID that we captured.
Yeah, Matt, and we talk about this in the terms of seller fraud, where a lot of people in different states are saying, oh, I'm out of state and I have this property, and they're selling properties they don't even own. Get them on the phone, get them on face-to-face, make sure you can just weed out the weasels.
Right.
Through transparency.
You know, third point would be to use technology and apps, location, share your location with others. You know, it could be as easy as, hey, Jane, I am meeting a new client. I'm doing a walkthrough. Can you stay on the phone with me? Can you watch my location? There's other apps I know out there that you can hit a panic button and let someone know if something's amiss. So just be safe. And then the third point, which is just common sense, and this is not just for realtor safety, but your own safety, trust your instincts. If something does not feel right, get away from the situation if you can.
Yeah, Matt, and you know, in the real estate industry, we have contracts, we have multiple offers, we have all these things. You're constantly looking at your phone, you're constantly trying to forward an email, you're maybe driving from place to place, you're trying to make a phone call. You know, hey, pull over, right? How many accidents have we seen where someone just blitzes into somebody because they're distracted? Stay focused on this.
Yeah. So that's the highlights of Realtor Safety Month. So check out the resources and definitely stay safe out there.
Great, Matt. The Bears did not stay safe against the Detroit Lions. Is embarrassing. I don't know how much we need to cover it.
How long did you watch the game?
I did not watch not 1 second of the game. I was at my daughter's soccer game, which was much more entertaining. I did get scores and feedback, and it seemed to me like we were in it at the beginning when it was 0-0, but shortly after that, it got out of hand.
So I unfortunately watched the first half, but when halftime broke, I decided
it was a beautiful day, man.
It was a beautiful day, and I had things to do. So to make a long story short, I did not waste.
Drawer, Matt, or
I
whatever.
did not waste the second half of the game and got stuff done instead.
Okay, well, the good news is, Matt, we're shifting from the Bears. Now we're going to downgrade our thing to 14-2, right? Okay, so the Cubs are on a roll. They're in that top wild card spot. They're still got the nipping at the heels of the Brewers. We'll keep our eye on that. We got 1.5 weeks to go.
I wish they just would go on a little run, win 5 games in a row, and just put it all to rest. Say, okay, they're in the playoffs.
Well, there is a game tonight, Matt. Skeens against, I think our guy is it Stroud, or I don't even know.
I don't know.
Okay, but our good pitcher, we should know that. But we're too busy focused on the real estate news, Matt, to be obsessed about sports. But anyway, good pitchers duel tonight. Matt, thank you for your hard work on the news, and we will see you next week. Don't forget to like and subscribe the People Not Titles podcast.
Thanks for watching.
Signing off. Hey, thanks for listening to the People Not Titles podcast. We are proudly sponsored by Land Trust Title Services. If you enjoyed the podcast, please hit the like button, please subscribe, and we'd love it if you'd share our podcast with your friends. Thanks a lot.